Morning, everybody. It's Friday, the 24th of September. We're Signal Centre Talking Ball. I'm John Aber, joined by Steve O'Hare for the final time this week. How you doing, Steve?
Yes, not too bad, thank you.
Good. Okay, let's get stuck into it then. So, a bit of fading of the rally that we've seen over the last couple of days. In terms of main headlines, Bank of England left the door open yesterday to an increase in interest rates as early as November, which would be,
Ooh.
yeah, pretty quick, I think. That's as spiking energy prices risk a big jump in inflation. Most policymakers agreed future tightening should first start with a rate increase, even if that came before the bond purchase program expired around the end of the year. So that's how obviously it's been left open to the interpretation that it could happen sooner. This is part of a hawkish turn that also spans the US Federal Reserve, leaving the ECB looking lonelier than ever on its monetary policy stance. So we have to wait and see what Christine and her team have to say about that over the next couple of weeks or so. Um, Chinese property developer Evergrande um, seems to have been reassured by regulators that there won't be much of a concern around that. Looks like they're going to get help. Steve, you were listening to a story on that this morning. Any
Yeah,
sort of
I was listening to the story. It's funny, I was halfway through the story, so I haven't listened to all of it. But it was from a guy who runs something called the Plain Bagel. Um, really sort of informative, just running through basically their balance sheets and really how they got into this position. And what I've picked up so far, which I was listening to while trying to make a coffee, and my headset was breaking up, so I couldn't hear it all. But effectively, it was when China, the government basically come in and restricted the amount of leveraging you can do, and they put three different levels in: a green, amber, red, and immediately Evergrande was hit all three. So that meant that they couldn't borrow any more money to continue what they were doing, which was obviously they're a huge property developer, amongst other things. They've got other investments and other things. So as a company, I think it's sort of like it makes money as a company. However, now their business model is a bit foobar, and their share price is still uh, around the lows, 230. So um, they're not going to get bailed out by China. They've come out and said that, but obviously that there may be a little bit of like flexibility in how are they allowed to run the company. I don't know. I haven't heard
okay,
that.
cool. So the other situation ongoing, obviously, we talked about briefly, is the European growing energy crisis, which is claiming more scalps by the looks of things. Some of these sort of second and third tier energy companies look very close to going pop in some instances. So obviously more to come from that. Steve, we're going to try and rush this on a little bit today because I've just seen I've got a meeting at 9, so I'm going to have to
Right. Okay.
push on. Let's get stuck into the chart, shall we? Just try and
Yep.
keep it brief and just sort of take into account, I guess, the risk rally that we've seen in the last couple of days and how things are looking to maybe end the week.
Yeah. Also, so I did have a little look at another call. Who was it? Oh, I forgot his name now, but very much about the issues that we're facing. So, like the last financial crisis, 2008, you saw similar sort of things happening. Companies just sort of like smaller companies going bust, then sort of bigger companies going bust, then banks going bust, then I suppose we had Iceland, Ireland, countries going bust. So it all starts with little things. Evergrande is the second biggest property developer in the world. So that sort of going bust potentially is maybe the start of things. And like you said, other energy suppliers and things like that, they're all sort of like maybe the first shoots of the next big bear market, Joe. So you heard it here many times before, and it's sort of like that never happened. So I have slowed things down a little bit by getting that on. But let me just talk about DAX. I sort of like got involved in this morning. I saw this big spike up last night. It got up to 15,765, and if you look at that on the daily chart, you can see it's stalled in front of this 15,805 level, which I see as the pivot level, really. And it's reversed quite sharply. I got short of this morning after looking at the 4-hour candle as well, shooting star 4-hour candle. So potential for downside. I just feel like as we get towards the end of the week, people get a little bit tired, and then we've had this rally all week, people taking money off the table before the weekend just in case something happens over the weekend, and I expect to get maybe a negative day in indices. So just got down to 15,500, so that's a big round number. If we break there in DAX, I'm going to be sort of like putting my stop down to maybe entry level, which is about 15,620 or 30. FTSE, similar sort of formation, daily chart. Could we be forming an evening evening star formation? We could do if we do get a decent sell-off today. So 100-point sell-off, please, FTSE, and that will sort of like make my DAX position feel a bit better. On the Dow Jones, not so aggressively selling off. We've had 2 really decent days. This is an inverted hammer. I think I called it a hanging man candle yesterday. And this is I saw a morning doji star formation, which is bullish. We've had the rally. Thought it would extend a little bit higher, maybe towards 35,000, but we have got sort of like this sort of congestion area around here where we've seen battles between the bulls and bears before. So maybe we're stalling here. A break above 35,000 may open up a little bit, but at the moment it's under pressure. 34,700 trading. Nasdaq pretty similar, really. Again, off to a bit of a poor start today in the early hours. Still got a little bit of a way to go, but maybe we could see a little bit more of that profit taking that we're seeing. On the 4-hour chart, we've got up to these little swing low levels, 1, 2, 3, 4 sort of like times where prices reacted from 15,350, and now we've seen that previous support turn into resistance. And if you look back here, 15,400 offered the same sort of levels. S&P were trading again a little bit, I'm not going to say head and shoulders like, because it's not really, but we've seen the rally and a little bit of a failure, shooting star, and a sort of like negativity around here. Just thinking about the Aussie 200, that's again bearish engulfing, a bearish outside candle and 2 negative candles. If we do get a break again of this 7,300 level, then I think this bearishness would continue into the day, into the weekend. So watch out for that. China seems to have stalled in front of 15,267. This line we had here, don't really see a reason for that anymore, but more so it does seem to be pivotable around here. If you can see the lows, the highs, highs again, and we've rejected it again. So 15,250, shall we say, has held prices back, and we're getting to see a reversal now. Hang Seng, is below the sort of like the watermark level in my eyes, 24,730, really under pressure and forming a bearish engulfing candle. Looks to have stalled. Pretty topping formations on the short-term charts across the indice. Nikkei seems to be holding up quite well. So that's one thing that seems to be doing okay. But again, if we get a break below the 29,400, then we've got some serious issues here. We can see these engulfing candles. So topping candles coming in at these levels really needs to push above 30,350 to ease them concerns. So had a little bit of a jump up in Evergrande. We can see this sort of like, bit of relief, and not so much now. So the low there, just around about 2 Hong Kong dollars. But yeah, you look at the long-term chart, that doesn't look too clever to where we were back in 2017, or even where we were back in middle of the year last year. On to commodities, quickly a run through oil. We've had a decent week in oil. I mean, commodities out of all the asset classes are one of the most underperforming. You've got where we're printing all-time highs in indices, all-time highs in bonds. we are actually printing high, well, levels around about maybe 50% away from the all-time high in oil. Obviously, we remember the $150 mark. We're trading half of that, and silver, I think, is 60% lower than the all-time high. So, you know, the commodity market seems to be the cheapest market. So this isn't a surprise that oil is really battling with these resistance levels at the moment. So there is a bit of support there. If we look closely, it seems to have sort of like crossed that threshold of resistance at 72.85, and it's holding nicely above it, retested it, and held above it. So maybe a little bit more on the upside on oil, considering how undervalued it is. Silver for me, I thought we were going to sort of like with sayonara yesterday. We had a really good trade idea posted by Joe. Really nailed it and hit target about an hour after we shut at 9 o'clock. I think it was 10 o'clock. We saw the spike lower to 1741, which was his target after selling at 1770 area. So yeah, well done on that. That's pretty much reacted from that level, but we're back up at 1755, so a little bit mid-range. I'm not really sure. I still feel it's more to the downside. We can draw maybe a little bit of a trend line in, or a trend line resistance in. That'll come out. So 1790 would be your sort of stop in fading anything of this. 1790 to 1800 is the pivot level for gold, and above there I'd be a little bit more positive. Below there I still think we've got a chance of getting to 1680. Quick look at Bitcoin, which seems to have reacted from the spike lower just below 40,000 and looking a little bit more constructive. But we'll wait and see. If the indices take a hit, I think the cryptos will take a little bit of a hit as well. Cardano has recovered quite nicely, but still faces that the 240, 245, 250 resistance is still there. So under the cosh still a little bit, the cryptos.
Cool, thanks, Steve. Okay, FX, just keeping it really quick. So, going to start with dollar index. Yesterday we posted what looks to be a bit of an engulfing candle, really, into this resistance at 93.43 yet again. A bit of strength today, but for me, it looks like we could correct lower within this bullish channel. Still, overall, I am bullish, but it needs to get above these two resistance levels here at 93.43 and 93.73 for us to continue higher. In terms of euro dollar, that continued to find support just around this 117.04 level. We did close below it on the 22nd, but rallied quite nicely yesterday, engulfing most of yesterday's losses, certainly the body of the candle anyway. Volume wasn't particularly great on the uptick, so that's generally a sign that there hasn't been a huge amount of participation. So it could just be a case of selling into the rally here with Euro USD, expecting an eventual break of this support at 116.64. So keep an eye on that. On cable, decent bounce yesterday on the back of the Bank of England talking about a raise in interest rates, potentially quite imminently, maybe as soon as November. Looks to be the route they're going to take rather than tapering asset purchases initially. So nice bounce higher, a little bit of weakness today, but we'll see if we can hold on to these gains. And certainly there has been a bit of a pickup in interest in that currency pair recently as well, but remains to be a big support level between 136.02 to 135.71. If that level breaks, then it does look like we are going to see a continuation lower for me over the short to medium term. Euro sterling, so that tried to threaten breaking up above this resistance at 86.20. Failed here with the big old shooting star candle, backed it up with further losses. So I think lower prices are set to resume here in the short term. In terms of some of the riskier assets, they've had a decent move to the upside along with a move higher in equities. This is Aussie yen. After this real big move lower, we've seen two really big candles. Yesterday's candle wasn't that supported in terms of volume. And we're posting a bit of a turnaround today. So maybe the risk rally has come to an end there, and we can see or expect to see lower prices on that. Is it a similar situation in Aussie dollar? Yes, it is. Again, volume's not as big as they were the day previous, Despite the big green candle yesterday, overall trend remains bearish. Reversing today, for me, looks like we are set to head lower once again. So a case of selling into the rallies. That's it on the FX front. I don't have enough time to go on anymore, but let's have a quick look at the gun to the head trades from yesterday. Steve, you had a winner on cable, 72 ticks.
Whoop, whoop.
1.2R. Usually, when you win 72 ticks, they tend to be quite a bit bigger than that, as your stops quite generally a bit tighter. But really nailed that one.
Yeah, had to be a bit sensible after sort of that run of 5 losing trades. Oh,
Yeah.
so
Well, I'm on run of 4 now, so didn't work out for me on Euro USD yesterday. But we go again. Last trade of the week. So, Steve, I'm going to put a gun to your head right now, and you're going to have to give me a trade. What are you thinking?
Jesus, Joe.
Yeah, I'm
Thanks.
being
Thanks for that.
brutal
Put
this
the
morning.
heads up. I am right. What am I going to do? I am going to go. The one I liked that you just came up with was Euro Sterling, and I did well on sterling yesterday, so I'm going to try and follow that through with. I'd rather short Euro sterling than buy cable today. Maybe look for something like. The only problem with this trade idea is I haven't really got a great stop. 85.62. Let's have a 15 tick stop in here. Oh, 15 tick stop. I'll leave it like that. Targeting. So my stop, I'm going to put at 85.77. And I'm going to target 85.27. That's me. Getting short
Lovely.
here.
Good luck. I'm going to look at Aussie yen. So had a decent rally in the last few days. I think it's an opportunity to fade it. I've got some resistance here at 80.68, and above that I've got a fib level at 80.81. So it's a 61.8% fib. I'm going to sell it now at 80.37, and I'm going to target a move down to 78.84. Quite punchy, looking for it to reverse all of these gains that it's made in the last couple of days. 3.7R if it works out. Stop loss at 80.78. In an ideal world, I'd have it above this candle up here and above that 61.8, but I want the R to be attractive on that one, so I'm going to leave it there at 80.78. That's my trade for today.
Yeah, if anyone out there watching has got any markets that they want me to analyze while Joe slips off, then I'm more than happy to do it. I can sort of like go into a little bit more depth on what I think about the commodities while you toodle off, Joe.
Okay, cool. Well, just to finish off then, so later today we've got US new home sales. That's really the only data point of note today to finish off the week. So, yeah, thanks for everything this week, Steve. Glad to have you
Yeah,
back.
Andrew, mate. Yeah.
And I'm going to slip off now and you can carry on if you like.
Yeah, lovely. Okay.
All right,
Cheers, Joe.
cool.
Oh, he did shoot off very quickly. I was going to just take a little bit of a look at silver. And as I said, if anyone has markets that they want me to analyze live, then please feel free to pop it into the chat, whichever you're watching on. So taking a look at silver now, we are sort of approaching some quite pivotal areas. These are areas of definitely concern for bullish traders, but maybe opportunities as well. So 2164 is a level we've seen. This is a monthly chart. September 20, November 20, and even in August we got down to 2194. So just above this 2164 level. Again, we've got down to about $22. We've reacted off there. We're trading up at 22.65 at the moment, but you can see how important this is. And obviously for me, this is a channel. The initial reaction for here as a trader would be to buy the dip in front of, because we're in an uptrend, buy the dip in front of the support and have the stop quite tight just below there. If we do break there and have a monthly close below the 2264 level, then sorry, 2164, then I would be concerned that we are slipping into another bear move. If we look on the gold side of things, I believe we're in a bullish flag formation. So again, we've got this channel, similar sort of level is 1677 in gold. And for me, that would be a break of there, could open up a revisit to around about the 14.45 area potentially. But as I said, I'm positive on commodities over the medium to longer term. So really sort of like happy to be going with the buy and dip scenario in there. Natural gas, obviously, this has been in the news of late, and it seems to be sort of like picking up a little bit of steam again. So let's look at the hourly chart. We had a look at this at the start of the week to the 23rd, and we seem to have sort of been trending higher again. Next level of resistance for me would be around about 520. That is quite key, and could potentially leave us with this sort of like a rounding, this sort of almost like saucer-like pattern, which obviously we've been overbought recently on the hourly chart, and we're just correcting a little bit back from there. But if you look on the daily chart, this inverted hammer, this bearish candle into the inverted hammer, and then yesterday's rally is pretty significant, and I would expect to see a little bit more upside next week, especially if we can hold on to these gains that we made from yesterday. So further upside on natural gas, and we're seeing it in the oil market as well. On copper, we've had a morning doji star formation formed. This is formed this week, and price action looks to be pretty positive. As I said, the commodity market sector seems to be the one that hasn't really had the sort of like the euphoric rises that we've seen elsewhere. Let's pop along to indices, have a little bit more drilling down into the detail. Yeah, for me, this DAX this morning, we bought DAX on the dip. We've been stopped out of it already around about the levels we're trading now. We're looking like we're forming a bearish outside candle, which is very negative indeed, especially on a Friday. It could sort of like open up with all sorts of gaps or whatever if we get that negativity continue into the Sunday night morning Monday morning session. So yeah, not looking great for DAX at the moment unless you're short, which as I said at the start of the show, I am short of DAX. On the buying side, you're going to get support coming in around about 15,500, obviously big psychological level, 15,456, but below that, not really a lot until 15,234, and obviously the 15,000 level is huge. So really sort of like seeing how that plays out as the day progresses. Not a lot on the sort of fundamental side of things. Yeah, so I'm going to leave it there. We haven't had anyone ask for any markets, so we will continue to well, we'll see you on Monday next week, and look forward to joining you again then. Hope you have a good rest of the day and a good weekend. Thanks for joining us.